The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, outside of the soy complex on Monday, really felt like the rest of the grains and the livestock trade was pretty quiet. One has to wonder if a lot of traders have already decided to pack it in for the Thanksgiving holiday here this week. We're going to talk about that. Joining us now for market analysis, John Heimberg with Total Farm Marketing is on with us today. John, thanks for the time. Great to have you on the show again today. And I know with Thanksgiving coming up on Thursday, this is always kind of a weird week in the trade to me anyway. It feels like the last 10 years of doing this, and I know you've done this longer than I have by a few years. Just feels like one of those odd weeks where the low volume can lead to some volatility. Things can be a little squirrely here this week, can't they, John?
Yeah, they can. When you get thinner trade, things can move around pretty quickly just because there's not enough players in the marketplace to, take orders on and things of that nature. So, this week really kind of, as the week goes on, today and tomorrow will feel fairly normal. But when, a lot of traders will step out Wednesday, not even be around on Friday with the short day. We don't have night trade, obviously, Thursday night after the Thanksgiving holiday. So it can really turn into kind of a crazy time frame. And, basically people are going to be preparing for a 4 or 5 day weekend, before we come back next Monday, given just the lack of trade in this time frame.
This soy complex I mentioned, a little bit of strength there, volatility. Sounded like some of the rains over this past weekend in Brazil, in central Brazil, maybe weren't as much as was expected. I know there's more in the forecast, though, for this week. So it's kind of that give and take of a weather market still here, it looks like, the soy complex, isn't it, John?
Very much so. And, with that too, still keeps a little bit of a demand window open for us here in the near term. And again, that's some of the reason we're seeing that strength, plus just the competition on the crush side of the equation for those domestic bushels too. Even though carryover did go up in the last report, it is still fairly tight on a historical level here. We're watching the rains, that some rains did come through. You obviously saw pictures on social media of those rains out there. But when you go look at the radar, they were very, very isolated in terms of their coverage. Didn't move a whole lot. Pretty much if you're a have or a have not in terms of that rainfall total. Forecast maps continue to stay dry beyond this point. So we are going to see some damage, and we kind of expect that. We don't know how much right now, but the market's still pricing that in at this time frame. Watching the move today, if we can get back through the high from Friday last week, I believe that's around 61, 62, complete this reversal off the lows. That'll be a big piece of this too. Also watching what soybean meal's doing. It's reversing off its lows fairly aggressively. Good, strong day in the crude oil market. That's also helping support that bean oil side of it today. So, the combination of those things here is just giving beans some added strength after a pretty quick sell-off last week. Now we can find some footing and possibly, carry this length into the end of the week.
And I wonder, too, what if that could lead to some more farmers selling potentially in the soy complex if this market decides it wants to run a little higher into Thanksgiving. And on the flip side, corn, do you worry with low volume trade potential here that we could move this corn market a little bit lower ahead of December options expiration, John?
That'll be the biggest thing on Friday is those options and the expiration of those December options. The biggest thing, even talking to a couple people again this morning, I got those bushels. What do I do with them? And I think we're just seeing some people move corn onto the market here regardless and just not take the risk of storage on. Again, also we got first notice day right away next week too for anybody that's long on a December contract. They need to be out by the 30th of November. So you throw in the volatility of one of the largest option months of the year is the December options for corn, and then quick first notice day on a very heavily traded contract. That's going to bring us a lot of volatility here. Now we're down, penny or so today, 465. Remember September low was around 462. So here's another one of those situations we're bleeding that carry out of the market. I just don't have anything right now that makes me feel warm and fuzzy at all about the corn market here. The demand's still a concern, even though we did have a small sale of corn this morning. We are seeing those kind of routine sales come in. We're not seeing anything big. South American weather story, maybe more of a late, early summer type story as we get an idea of what's going on with that second crop corn out of Brazil, their exportable corn. So that might be more of a delayed type news item going into the second half of the year. So right now it's all about beans in South America. That's where the support comes from. It looks like wheat and corn are kind of tied at the hip, and gravity is just weighing on the cereal grains.
I was going to say that wheat market just continues to kind of churn around here. It doesn't really have any story to it that seems too friendly to me. And so I feel like that's going to be more so of a boat anchor on this corn market than soybeans could try and pull corn up here this week, John.
Correct. And, I think that's just, one of those things. You're talking competing grains that just have similar uses to some point. Now, the October low for wheat was 540, somewhere in that bottom range. We're 543 on that December contract right now. So we're down testing that October low. That's going to need to hold, or that just really opens up the floodgates here, maybe to the downside. Obviously, I think that pulls corn with it.
Talk to me about the cattle market here. Kind of mixed on Monday following a cattle on feed report that I'd say was neutral to maybe even slightly friendly. I know that placements number was a bit lower than some folks had feared it would be. And just looking at cattle on feed overall, up 2% though, but still a lot of folks saying it's a fairly neutral report. Is that kind of how you took it from Friday afternoon?
I do very much so, especially with the price action we've seen over the last couple of weeks. I think a lot of the negativeness was put into this. Now, this does set the market up for some bear spreading. We're seeing that today. Just a little bit more pressure in the front end because of those heavier supply numbers. But then the anticipation is still well out into 24 that the cattle supply is still going to tighten up. We're not seeing the expansion that we're expecting. Now, that'll probably won't get confirmed until we get to the cattle inventory report in January. But that's just going to still stay favorable to this marketplace. And you're seeing that today. We're stronger in the late 24 contracts, August, October, December, actually even into 25 a little bit. But we're seeing that front end weakness. Obviously, that's tied to the cash market, the retail values, and just the fact that we just got a few more cattle here than we thought we'd had. And that's just keeping a little bit of a push. That's what we mean by bear spread market. We're selling the front ends and buying the back end to balance it out.
With cattle and hogs, thinking about that beef and pork demand here now. We have Thanksgiving obviously this week, but then we got Christmas right around the corner, New Year's heading into the end of the year. How much you watching some of that retail demand to see if that can help out at all in these protein markets or provide any fodder here for the proteins as we move to the end of the year, John?
That'll be a very key piece in general is watching what happens with the beef rib trade. Now, we're already to Thanksgiving. Probably a lot of that is already taken care of in that regard. So, typically we see, carcass values start to slide in this area. Probably will continue that way into the very first part of the year. The aggressiveness of the slide will be the key. How's that way in the cash market? We saw cash softer again last week, just because of the weakness in futures. I still think we got a fairly rough stretch here. When I say rough, just not maybe falling apart, but not really rallying in the cattle market, probably into the first quarter. And then we start seeing the grilling demand kick back in again for the spring and summer. And I think that's when we start seeing that push into the second half of the year. But for right now, some of that opportunity that we thought was here has probably gone to the wayside just because of these larger cattle on feed numbers, these number of animals that we brought into the feedlots, mostly through imports in terms of bringing those feeder cattle in from Canada or Mexico. So again, still think it might be a little bit choppy, negative in terms of overall movement going into the first of the year. And then from there, we'll see what happens in terms of some of those longer term cattle numbers.
John, let's wrap it up with some overall risk management thoughts. As we alluded to, it's a lot of the same things going on in this trade right now, but obviously with a holiday week, it can be a little bit different. So what's on your mind? What do you want to tell producers or reiterate to them as far as just looking at their marketing plan here during this week as we get through the Thanksgiving holiday, John?
Just having conversations with some guys and just in general, everybody's expecting prices to maybe find some footing and start climbing. And I'm still just a little bit on the defiant of that side, just saying, what's the reason, here other than global supply or global inflation, just need the money flow, cost of production. The market doesn't care about those things. I know it's kind of rude to say, but at the same time, it's the reality of it. We're looking at the supply picture. We're looking at a demand picture that's still not very strong. And I hope I'm wrong in my predictions when I say prices look like they got still room to go to the downside here. So whatever you're thinking about, where's your risk? And that's where you need to put your kind of your marketing plan too. I'd rather today I'm buying $5 puts for July corn. I just want to make sure we keep that floor underneath this market. I would rather have that floor go worthless and leave my bushels open to the upside than figure out what's going on down the road in terms of, prices maybe being down another 30, 40 cents. I'm also talking with a lot of guys that got good basis opportunities for the spring. But if you lock your basis in, lock in the floor with those put strategies. The reason why, at least that guarantees you a paper cash floor per se. I've had it before where guys have, were very excited about a basis they lock in and then the market loses 50 cents. So, those are things just to take a look at where the risk is, depending if it's grain, depending if it's livestock, or even the milk market, which we didn't touch on, which looks a little shaky again to me today. Where is the risk at? Make sure you protect the downside here going well into 24.
John, if folks want to have a conversation with you about some of those things there at Total Farm Marketing, what's the best way to get a hold of you?
Sure. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com, and the website of ours, totalfarmmarketing.com. Just to reach out and have a conversation doesn't obligate you to anything. Just love to go through, talk about some different things, ask those questions. In these types of markets, make sure you have all the tools available to you in your marketing toolbox.
John Heinberg with Total Farm Marketing. Thanks for the time. Happy Thanksgiving, John. We'll talk to you next week.
Sounds good. Have a great holiday. Talk to you next week.
That's going to do it for Market Talk today. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.